The US dollar index, which gauges the buck against a bundle of its main competitors, prolonged the choppy trade last week, although managing well to keep weekly gains after two consecutive pullbacks. The index was trading in the positive territory on Friday in the 98.50 band. For the week, it gained 0.2%. Nothing changed around the buck following the largely anticipated rate cut by the Fed on Wednesday. A new repo operation by the Fed managed to reduce the Fed funds rate to 1.9%, alleviating at the same time funding pressure and somehow lending extra support to the US dollar. Further out, and at his speech on Friday, Boston Fed EURUSD stressed the US economy does not need additional monetary policy, adding that rate cuts have a negative impact on prices of riskier assets. Looking at the broader picture, the positive view on the dollar is still underpinned by the solid US labor market, strong consumer confidence and spending, and the pickup in consumer prices, all adding to the buck's safe haven appeal and the status of global reserve currency. The euro-dollar pair declined on Friday to end the session at 1.1018 with a weekly fall of 0.4%. Economic data out of Germany fell short of expectations, but the release did not move the exchange rate much. Producer price index figures declined by 0.5% in the month to August, while analysts had expected it to remain unchanged. Meanwhile, the British pound traded at 1.2502 at Friday's close. For the week, sterling advanced by 1.3%. The UK currency was supported by positive comments from European Commission President Jean-Claude Juncker, who said he thought Brussels could reach a deal with Britain to leave the EU. In the meantime, crypto markets continued to trade sideways, with the majority of the top coins seeing losses. Bitcoin fell by 1% on Friday to end the week at 10,198 points and post a weekly 2.4% fall. Meanwhile, oil markets went for a wild ride last week in the aftermath of the drone strike on Saudi Arabia's crude processing facilities. Despite the severity of the supply outage, Saudi Arabian and OPEC sources quickly reaffirmed the markets that crude flows wouldn't be upended. That's all for... The international benchmark ICE November Brent crude future contract fell to $64.28 a barrel on Friday. Week on week, it rallied by 6.4%. However, there have been no reports of failed delivery this far, so oil prices aren't likely to skyrocket again in the short term. An exciting week for WTI has also come to an end, with the benchmark declining to $58.09 a barrel on Friday, but holding a strong 5.4% weekly gain. Meanwhile, gold futures settled higher at $1,515.10 a troy ounce to tally a 0.5% gain for the week, the first in 4 weeks, as geopolitical tensions remained high, boosting safe haven demand for the precious metal. You've watched Combined Review of Financial Markets with me, Anna Kasatkina. Stay tuned.